The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
If you're building or buying or selling a home, the Real Estate Crew's got news for you at the Real Estate House Party.
With attorney Rick Carter,
Real Estate House Party.
paralegal Kathy Holsthausen,
Real Estate House Party. Come in, have fun.
and comedian Tony V. Now, here's real estate attorney Rick Carter.
Welcome and thanks for joining us here on the Real Estate House Party. Thank God Lou Chinnapi showed up today because I don't see too many of our co-hosts. She's taking a well-deserved break. This is her June vacation.
Nice.
Yeah. She worked very hard last week. She's the only one I know who puts 80 hours into about 24 hours and then takes the following week off. Lou, what do you think? And then she ran with us on Sunday.
Exactly. She ran the road race with us Sunday.
I could tell you're a lot faster than us because I was pulling in. You were already paying for your tab by the time I was pulling into the tavern.
I think I was on my second beer by the time you pulled in.
But yeah, we got to thank all our. Thank you for showing up today, Lou, because our co-hosts. One is golfing and one is on the beach, so they well deserved. Nice. And I want to thank our studio audience and all the other guests who try to come on, but I said no. Yeah, I have Lou Chinnapi on today. That's more of a show than we really need.
Exactly.
And so I'm going to ask Ed Sullivan because he's very smart, and this is going to be the basis of this whole show, Lou. What is 20% of 500,000?
20% of 500,000 is $100,000.
Thank you very much. How about 20% of $1 million?
That would be
twice as much.
Yeah. Exactly.
That's the basis of the whole show today.
Exactly.
So Lou is here, and Ed's saying, what's this all about? Lou is with Arch Insurance, Arch Mortgage Insurance.
Exactly.
What is mortgage insurance?
We're a private mortgage insurance company. Arch is probably one of the highest rated private mortgage insurance companies in the industry. And what we do is we insure mortgages for lenders and investors so that homeowners can buy a home before they actually come up with 20% down. Because as you mentioned before, $500,000 home, someone wants to buy it, they're going to have to save $100,000.
Right.
How long do you think it would take someone to save $100,000?
12 years.
Good. I prepped you with
Lou
that
prepped me before that one, I was all over that. I gave,
it could take the average person 12 years to save 20% down to buy a home.
So
in our area.
So let's think about that. When we were all brought up, the generation before us had to have the 20% down. Right. Banks wouldn't even give out unless you had 20% when you were buying that $50,000 house. You had to have a 20% down.
Right.
Then prices got a little crazy, and we started coming up with mortgage insurance. We've talked to a lot of bankers, and as you say, it takes 12 years to come up with that down payment. So think about that. So if mortgage insurance, we'll talk about cost, $100, $200, $300 a month. Some people say, no, I don't want to buy that if I have to pay that mortgage insurance. But you multiply that out, and if a house is going up $25,000, $30,000 a year, you're clearly getting,
Correct.
You're reaping the
benefit.
benefit.
In a lot of cases, if someone has a good credit score, they've managed their finances well, leading up to that time when they're buying a house, mortgage insurance is very inexpensive these days. It's not as expensive as it used to be.
Credit scores play in with mortgage insurance?
Credit score, your total debt, what we call your debt to income ratio, so your total debt versus what you earn, that plays into it. There's a lot of different factors.
So what's going on now is the real estate, I think we're the busiest we've probably been in 30 years. Last couple years, and this is good. I'm glad Tony V and Kathy are taking today off.
Yeah.
We can get some content in finally. Exactly. You know what I mean? Ed, am I right about this?
You're kind of right.
Yeah. We're going to get some information today.
I will say in Kathy's defense, she's usually pretty focused.
Very focused on her kidding around, and I think today we're staying a pretty straight and narrow. I think, right?
Well, you could throw a joke out if you.
We will.
Yeah.
Well, we were watching her run up and down the hills of Charlestown on Sunday, and she was pretty focused.
She was very focused. Yeah. So was Tony V, as he sat in his beach chair as we ran by, saying, "Go get him, Rick." Yeah. So yes, the two of them were very focused. So today we're going to get a lot of information. So this is what's going on. Last couple of years, I don't think sellers were wondering if they should sell their houses. And then last year, record prices are. So I think sellers are jumping and say, I better get moving on this. So
Right.
it seems like there's a lot of sales going on.
Well, you know what, and a nice thing that's happening is a year ago you had a lot of home buyers that were getting very frustrated because
Exactly.
you had 100 people going into a property, putting bids on it, paying
Not enough
over asking.
inventory.
Not enough inventory. We're starting to see a little more inventory
Right.
now, so homeowners can actually find
So
that
those
house
frustrated
that they're looking
buyers
for.
are coming back around.
Exactly.
So
exactly.
today's show is good even for the first-time home buyers, but also for people in their 50s and 60s because their kids are going to be buying some houses soon.
Right.
And to think of the prices that they have to pay now is just astronomical. So,
Right. And you had also mentioned that rates were coming down. We're starting to see people that bought their house a year or two ago refinancing their mortgage for a lower rate, and they may still need private mortgage insurance,
Right.
and you can still get private mortgage insurance on a refinance as well.
all right, so I'm going to ask you that in a couple seconds there on how much they have to pay on that. But so right now, mortgage insurance, if you don't have 20% in your equity in your property, you got to get the mortgage insurance.
Correct.
Right. How does mortgage insurance? What's an FHA loan?
So an FHA loan is a government-backed, government-insured loan, similar to private mortgage insurance, but it's backed by the government. Some of the differences are, and I feel some of the benefits of private mortgage insurance. If you have a good credit standing and you can afford private mortgage insurance, I think it's a better deal.
Go that route.
Only because with private mortgage insurance, you can opt to pay a monthly premium, and that's all you pay. But with some of the government programs, you have to pay an upfront premium plus a monthly premium. And the big difference is with private mortgage insurance, it's cancelable.
Okay.
You can cancel that at a certain point
So how do you
in the
cancel
mortgage. There's several different ways, but property appreciation can be canceling. If you make principal payments, you can cancel your private mortgage insurance. If you make improvements to the property and you reach that 20% equity, you can apply to have your private mortgage insurance.
Is there a mechanism in place where you could automatically get rid of it after X
So
amount of years?
when you buy a home with less than 20% down, if it's an owner-occupied property, single family, and your loan naturally amortizes to 78%, your private mortgage insurance, your monthly private mortgage insurance is automatically going to be
So the lender's
stopped.
required to get rid of it.
Exactly. The servicer will take care of that. But in other cases, you can apply to the servicer to have your private mortgage insurance.
And some of these prices around here are just going crazy anyway. We're just talking
Right.
about Everett beforehand. With the casino,
Yeah.
those prices are going crazy. Everett, the whole Boston area, anything near a transit system is just.
And apparently, if you have any land in Everett and you want to open a parking lot, that's what you should be doing.
I think you're right. Anything near a transit system is good. What is the HomeReady loan?
All right, so HomeReady is a great loan program, and I think it was developed by Fannie Mae, and I think Fannie Mae developed the HomeReady loan really to give people an opportunity to buy homes in certain areas that they want to. It offers certain underwriting concessions where you can buy a property with an in-law unit and use that rental income. You can buy a property with as little as 3% down, which was always one of the selling features of a government loan. But now with a standard Fannie and Freddie loan, you can go to a bank and purchase a home with as little as 3% down.
So those 3%, you're not paying, as you say, with an FHA loan. There's that funding fee, that FHA fee, right?
Yeah, that upfront premium.
Right,
You're not paying
right.
that. You can just pay the monthly premium.
Yeah.
With
How
a private
much
mortgage.
does that run roughly? But again, it depends on credit.
It
How
depends.
much you're
It depends
putting
on the LTV. It depends on credit. But I've seen monthly MI premiums as low as $25, and I've seen them
Really?
as high as $200, $300. So
Yeah.
it really varies based on a number of factors.
Can you do?
And your mortgage, and when you meet with your mortgage loan officer, they can price that for you.
Everyone should be calling their loan officer right now. Rates are
I
so
think
low.
so too.
We're
Yeah.
gonna get Ed Sullivan a loan.
Yeah.
Yeah.
I'd like one.
You like
Okay.
one?
Yeah.
Just they're in the threes, I think, Ed.
I can't do better.
Yes, you can.
You could do.
You have a
better.
0% loan, so I
Yeah.
think you're safe.
Yeah.
Now, do these have to be owner occupied?
Yeah, these are owner-occupied properties.
Yeah.
So it's really promoting home ownership. And in some areas, there are income restrictions. But in some of the gateway communities, you'll find that there are no income restrictions, which
So
are great.
what would the income restrictions be?
Just what the area median income for that
So
area
each
is.
area-
Yeah. Each area has a different area median income. So depending on where you're looking, your loan officer can look up and say, is this a restricted area that has an income restriction? And what is the area median income? And they'll match that with you. Or if it's an area that doesn't have an income restriction, it doesn't matter what you make, you can get a HomeReady loan in
How
those
about
areas.
rural loans? Familiar with those at all?
I'm not familiar with
Yeah,
rural
no,
loans because I've always been from the Boston area,
Yeah.
so I've never seen a cow. So,
Are you
yeah.
thinking
Except you're
of,
down Route 1, right?
are you thinking of
Yeah,
buying?
unless they were plastic and wearing a Santa hat.
I think Rick's thinking of buying a farm.
I'm thinking
Yeah.
of buying a farm.
Yeah, let's hope
Gentleman
Rick doesn't
farmer.
buy the farm.
Farm and,
Yeah.
and then I'm going to put a bononimium or something like that.
I thought Rick was buying the farm. That's a whole nother story, though. Okay.
He's sent to the farm. Exactly. Well, I'll be the last
Yeah.
co-host to survive the show
Yeah.
then. The other
Yeah.
two don't seem to be
exactly.
available. So,
Yeah.
so it only can be owner occupied, right? How about if you buy a 2-family or a multifamily? Can you do those now?
You can do those now through some of these programs, and you can buy multifamily homes now with as little as 5% down if it's going to be an owner-occupied
Jeez,
property,
I feel like
which
going
is
out
great.
and buying a bunch of properties today.
Yeah. Owner-occupied, Rick.
Ed, let's take
we're
some money.
promoting home ownership. And June is home ownership month. So
Is it?
Yeah, it's a good month to be talking about some of these
Oh.
products.
All right. Well, that's
Yeah.
why we had you on today because
Yeah.
we knew that.
Yeah, exactly. Yeah.
So you can.
So some of these, multifamilies, where a lot of younger people and just people in general are looking to gravitate towards cities. People want to live closer to cities now.
They want the walkability ratio.
The
right?
walkability
Yes,
ratio,
yes,
exactly.
exactly.
So those programs are becoming more popular, and we're seeing a lot of multifamilies, and people are buying them, living in one unit, renting out the other units. And when your loan officer runs that loan through an automated underwriting system, so they gather all your information, they put it into their computer system, they run it, they get what they call an automated underwriting decision. If you get a positive decision, you can buy a multifamily with as little as 5% down, which
Really?
is outstanding.
That is outstanding.
Yeah, because in this area, a lot of multifamilies are very expensive,
Right,
particularly
right.
in some of the urban
Well,
areas.
what we're seeing is a lot of people are buying the multifamilies. They're living it, but then they condoize it. So So that's
Is that a word, Rick?
It is
Yeah,
today.
okay,
Yeah,
all
yeah.
right.
It's
Okay.
it's
I
home
noticed-
ownership month. We can
I
make
noticed
this stuff up in
you
June.
look to Ed for confirmation
June?
of that.
June confirmation.
Yeah.
Yeah.
Ed, you good with that?
Condo-wise?
Yeah,
Okay.
yeah,
All right.
exactly. It's you looked that up in Webster's there.
Okay.
Oh, that's the first word we've ever made up on the show, Ed?
Not by a long shot.
No, I think that's because again, today's market, buyers, there's more homes for sale.
Mhm.
Buyers are ready to go if they can get over. A lot of students got to get over their debt, but they just don't have that down payment. So
Right.
I think it's huge now.
Yeah.
If you,
And I don't have all the ins and outs of it, but I know the secondary market is.
you look
is,
like you do though, Lou.
Yeah,
you have the suit
but
today. You
with,
have the tie. You
with-
I'm lucky. I just wore my shirt today. I usually have my golf attire on there, but
I know Fannie Mae and Freddie Mac are looking at student debt and trying to make concessions and trying to work with guidelines to make that a little more affordable so people can get into homes. So because you want to promote home ownership, and it is the American dream, and it's a staple in America for people to own their own home, and they want to do it. So they're working on that. And I know there have been some changes to underwriting guidelines. I don't have the specifics, but again, that's where someone working with a good loan officer could
Lou,
could
I think
find
you
that out.
alone are going to change everything in this state where people are going to buy home ownership.
You think so?
Just
Okay,
do this podcast
perfect.
alone.
Perfect.
Now you wear
Great.
a lot of hats too. We got to ask you a lot of hats. So a lot of questions with different. We'll get back to the private
Okay.
mortgage insurer. You've also tell us a little bit about your history. You've actually worked at title insurance and as a lender.
Yep, I worked for a community bank for 15 years.
Yeah.
Started there as a teller. It was probably the best job I ever had. The great thing about being a bank teller, and I don't think people go into banks anymore and talk to tellers
I love it.
anymore.
I was a bank teller once. It was the best job I ever
But
had.
the best part about being a bank teller is you spend 2 or 3 minutes with people and they tell you their whole life story.
Oh,
You
yeah.
know everything
Oh, yeah.
about them.
Oh, it's better than
and then
a-
just
than a
when you're
bartender.
getting bored, they're done and they move on and you get the next one.
So you want most of your relationships like that? Is that what you're saying? I got you. Your bank was the best one because in those days, banks, attorneys never looked for business.
Right.
The people, all the attorneys before me,
Yep.
kind of sat in the office and waited for that phone to ring.
Right,
And,
right.
I remember going to your bank.
Yep.
And
I remember everyone's mouth fell open when they said an attorney came in and asked for business.
I used to go and
Yeah.
ask for business.
Yeah.
What was the manager's name? John?
Don.
Oh, yeah. We won't mention his last name. So the first time I go into him, I say, Don, I'm Rick Carter. We're on your closing attorney list and want to see if we can get some business. And he looks at me, he goes, you know what? I don't give a rat's ass about you attorneys, but the brokers seem to be asking for you, so I'm going to have to put you on our
Right.
list. I said, all right, well, thank you, and nice to meet you as well. So,
Right. And you know what? Then the whole attorney marketing phenomenon grew exponentially right from
us.
that. It was amazing. Yeah.
Carter Law Office
Right.
started it.
Yep.
Yeah.
It all started with Carter Law Offices. I'll never forget it. And then I remember talking to some attorneys saying, I'm not going to go out and ask for business. They need my business.
Oh, okay.
Okay. They didn't
How
last,
long have they been out of
last
business?
very
Speaking of
long.
business, how long have they been out of it?
Exactly. You know what? I tell my kids, everybody's a marketer. We're all marketing something. So everyone has to be a salesperson.
So you're marketing all the time.
Exactly.
Yeah.
That's pretty much
You
what
go to
I
all
do.
lenders, not mortgage companies, but lenders, right?
No, I go to mortgage companies, lenders.
Yeah.
I talk to real estate attorneys. Real estate brokers.
Yeah.
I go anywhere where I can promote private mortgage insurance. And a lot of real estate brokers do not understand private mortgage insurance. So I like to go out and do educational events and,
What had
show
such
them
a
how it works.
bad connotation
Exactly.
for the longest time.
Exactly.
Oh my God, you need
Exactly.
private mortgage insurance?
Right. But my favorite story is if you have someone who has $20,000, they could go out and buy a $100,000 home.
Right.
And live in it for
Right.
3.5 weeks and then have a couple kids and they have to move. Or they can take that $20,000 and buy a $400,000 home with private mortgage insurance and grow into that
I
home
like
and,
that.
and stay in there. It's actually a more cost-effective way to buy a home.
Right. The
Yeah.
brokers
and
yeah,
the
go
real
ahead.
estate broker is going to get a bigger payday
What?
on that loan. Yeah.
Oh, so that seals it.
Exactly.
Do you do a lot of broker classes, things like that?
Yeah. In fact, I'm doing 2 tomorrow.
Oh, you are?
Yeah.
Yeah. How about if people want to get some counseling? Do you have first-time homebuyer programs? Or?
We do offer. We have a whole on our website. Our lender customers use our first-time homebuyer counseling information, which is all available on our website. And then we also offer free online homebuyer counseling.
Really?
That if someone's working with a lender, all they need to do is log on to the website. They put in the lender's name and they put in Arch Mortgage Insurance. It gives them access to this online class, which will give them a certificate at the end.
Yeah.
And it's a great program because people don't want to go to classes anymore. People are busy. They can do this at home. They can start it. They can stop it, as they need to. It gives them a full, understanding of the home buying process, what it's like to own a home. There's even a portion at the end where they put together a sample budget because that's something that, a lot of younger people, first time buying a house, they don't understand how to put together a budget. It will help them with that.
Budget?
Yeah.
Balance a checkbook?
Yeah.
Yeah, you say that.
I don't think anyone balances a checkbook anymore because we all go online every day.
Yeah, you go to the ATM machine and figure it out, or you go online.
My wife balances a checkbook.
No, she doesn't.
Yeah, let me run this story.
Go ahead.
I go in her office one day and she's looking through her change purse, and I said, are we out of money? She said, no. I said, well, what are you looking for? She said, I'm balancing the checkbook down to the pennies.
Wow.
That she has.
Wow.
So she doesn't like me. There's a whole category called Ed Miscellaneous where
so she kind of forces the balancing. Is that what it is?
Yeah.
And at the end of our fiscal year in the Sullivan household, I get reports.
You do?
A pie chart report of my expenditures with things marked as being over budget. So
and the biggest part of the pie is miscellaneous, right?
it's, cigars.
Cigars.
She said, you're over the cigar budget this year. I said, I was totally unaware there was a
You should work for a cigar company. That might or a shop.
Yeah.
That
Get a
might
discount,
save you a little
right?
money.
All right.
I think you're actually kind of lucky to be married to someone.
I
like
am.
that.
I
Yeah.
wouldn't have a dime
Yeah.
otherwise.
Yeah.
I would have spent everything I ever made.
Yeah, I'm not a big spender either. My wife accuses me of having my communion money.
Oh, really? So Tony V says that's why we'll give one Tony V. That says why he wanted to get married.
Mhm.
So he didn't have to think for himself anymore.
Oh, perfect.
And now we got Ed Sullivan.
Yeah.
That's why he got married, so he didn't have to balance the checkbook anymore.
Yeah.
And these homebuyer seminars,
Yeah.
what do they? You never attended them? Or,
The homebuyer class.
yeah. What,
I
what do
actually
they come
did it-
up with? Because
I did it online. There's a whole. They talk
Do
about.
they talk to like the basics? I have so many buyers after the fact, first time home buyers that, they really need to get coached more on the whole process. Just so many
It goes
things.
through the purchase and sale process. What happens? What needs to happen?
Purchase and sale, I'll give you an example. They don't know a lot of times they have to give 5% down when they're purchasing something. So if they're buying, a $500,000 house,
Mhm.
they'll probably have to come up with $25,000 possibly as a down payment, as an offer. So even if you have a program, you're only putting 3% down, the brokers might be requesting a 5% down
Oh, really?
to bind the offer
Yeah.
in purchase and sale. So
Yeah.
a lot of times they don't know that. They don't know that if they walk away from the deal, they think they're only losing the original $1,000 that they've given an offer. They don't
Yeah.
know they're also losing that other $25,000.
Yeah.
Right.
I mean, I'd like to. We got to coach them on all the scare.
Yeah, and I
techniques.
think the homebuyer classes do go through
They
all
do
that.
go all
and they
that?
explain that.
You know what else? Financing and closing dates. There's no concept of those anymore.
Yeah.
You
They
know.
don't understand the interim insurance, how the interest.
Yes.
Interim interest works on
Yep.
a loan.
Yep. Yep.
So I believe it goes through some of that on the closing. It
Oh,
goes
it
through
does.
Closing costs and
Sellers
how those
don't
work.
understand that either.
No,
the,
they don't.
The thing that
No.
always confuses them is they say, I paid the closing costs. Yes, you did, but there are other costs
Yes.
at
Yeah.
closing,
Yeah.
like
Right.
prepaid
Oh, well,
interest.
yeah.
Right.
Oh, well, we used to get all the time. Well, I have a no closing cost program. Why am I bringing in $3,000 today? They
Right.
just have no idea on that.
Yeah.
No.
And it's because you're right. Because there's a lot of times it might be prepaid interest. They might be closing on June 4th,
Right.
so they got to pay all the way through the end of June,
Right.
and then their first payment will be August
And
1st.
in recent years, the CFPB has changed a lot of the disclosures to make it a little easier for consumers. I'm not sure it's easier. That's where, again, and I know I say this all the time, but it's really important to work with a good real estate broker and a good loan officer who are going to explain all these things to you and go through your disclosure
And you were going to say
forms.
good real estate attorney,
Yeah, and a
right?
good real
Yeah,
estate
he was
attorney as
getting
well.
to that. He was
Yeah.
getting to that.
Well, that was
The other thing they don't know is they don't. A lot of them don't do their due diligence. I have a lot of, and last year. That's why I think this year it's a lot better environment. Last year they were giving up their home inspection contingencies,
yeah.
which is hard because
Yeah.
I would get calls after the closing. They would say, such and it's not working. What do I do? Who do I sue? I go,
Right.
well, what did your home inspector say? Well, I waived the home inspection.
Right,
You
right.
know, we have.
But
one,
I think scarier than that is giving up the mortgage
Oh,
contingency.
absolutely.
So the mortgage contingency is in the purchase and sale, and it says that they have to obtain a commitment for a mortgage by this date, or else they get their money back.
Right.
When they waive that, if they get denied for that loan, they could lose their deposit.
right,
Yeah,
exactly.
that's serious stuff.
And a lot of times they don't understand. And I think brokers and I think bankers don't understand this. They think, all right, your financing date is June 15th. They think it's like some goal. If they just get that commitment letter that day, everyone has satisfied that condition. But there might be 25 conditions in that
Right.
commitment letter.
Right.
And we tell this example all the time, and I'll say this will be the last time, but I was representing a seller. The buyer came in and said, all right, I have my commitment letter. I'm good to go. One of the conditions said, well, you got to give us 6 months of back statements. They said, that's fine. That's easy. Here's my 6 months. And so they've already let the commitment date go. But what the bank was looking for was some verification she was getting child support, which didn't show up in those 6 month statements. So she got turned down.
I gotcha.
So I think that's probably the biggest mistake first-time buyers, or actually a lot of people do. They don't understand what that financing date is.
Yeah.
You also
And you know what? It is. There is a lot of paperwork with mortgages now,
Yeah.
and I think anyone
no one
that's-
reads it.
Anyone that's applying, no, but anyone that's applying for a mortgage, you really need to be open to providing the documentation that's specifically
Excellent point.
requested of you, and do it in a timely fashion.
Oh, yeah.
And don't think, oh, I can get away with this. They don't need
Oh,
it.
yeah.
They need it. Everything needs to be documented.
Yeah.
These loans are
Sometimes
audited. We
everyone
wanna make
turtles
sure
up and they think, all right,
Right.
I won't say anything. And they won't
Right.
ask for this again
Yeah.
if I don't say anything. But you're right. So
Yeah.
they don't get their condition, if a banker says, I need this,
correct.
you probably need it.
Right.
Some of these bankers, they send out, all right, this is going to be our only email to you. You got to get this in, but again, they ignore it. So
Yeah. And something else that I will tell consumers, generally they're going to ask you for specifically what they need, and maybe it's something that you can't produce.
Yeah.
But talk to your banker and say, is there an alternative piece
Yeah.
of
No, that's
documentation?
good.
Because they'll work with you on that in some cases. In some cases, they'll tell you what they need, and there's no way around it. But in other cases, there's more than one way to skin a cat.
And also, if you do send it into one department, I would save that email.
Oh yeah.
We get so many buyers
yeah.
saying this is so frustrating. I must have sent them 3 or 4 times.
Right.
But just save the email, and we see that all the time.
Yeah.
Well, Rick, my last closing was the best one ever.
Yeah.
I didn't go.
Yeah. There you go.
No one's going anymore to the closings.
No, I mean,
Yeah.
it's somebody, well, first off, I thought the people buying my house were a-holes, and I never wanted to see them again. So it was easier to...
Why were they a-holes? What happened? Ed, we're here for you in the last 5 minutes of the show. Tell us what happened.
It just was one delay after another.
What was it, financing?
It
A
was
little bit of
weird
everything.
in they owned a company and
They should have really been
moving money
nicer to you because you
around.
know where they live.
I know where they live.
Plus, you're on a lot of you produce a lot of podcasts.
You
You could get the word out.
I've got a lot of reach.
Yeah, you got a lot of reach.
I'm not going to name them on this podcast. Maybe the next one.
Lou, you also worked at a title insurance company.
Exactly.
Should people get owner's title insurance?
Absolutely.
Absolutely.
Owner's title insurance is
I wish we
probably
had another 45 minutes. We'd talk about
I
some of
know.
your first American parties.
It's it's probably one of the best deals on the closing.
What, the first American parties?
No.
Oh, because they were
owner's title insurance. You
Yeah.
buy it once and it protects you for as long as
Right,
you own that
right,
property.
right.
I bought my house 30 years ago. You sold me my owner's title insurance
Yep.
policy, and it's still in place.
still good.
If I ever need it, it's there.
Yep.
Yeah.
Peter Norton had just hooked us up with the first American. Yes,
Yeah.
but you're right.
Yeah.
You're right.
Yeah. It's really a good deal.
So it's a one-time charge, right?
One-time charge, and
Yep.
it ensures the marketability of the property for as long as you own the property.
And we see people say, "Oh, how often you need that?" We see that more than
But you
a
know
home
what?
insurance policy.
Well, you know what? How often do you need your homeowner's insurance? But you buy it every year,
Right, right.
And hopefully you'll never have a fire,
Right.
and hopefully you'll never have a claim on your owner's
Right,
title
right.
insurance policy. But it's nice to know you have it if you ever did need it.
And I heard your ex-company, First American, is doing a discount for first-time home buyers too.
Oh, nice.
Yeah,
Yeah, most of the title insurance companies will do that.
Yeah, okay.
For first-time home buyers. Yeah.
But you-
And there's a lot of great first-time home buyer programs out there. We deal with a lot of community banks, and we offer an alternative master policy, private mortgage insurance master policy, and we can do loans up to 100% financing for certain occupations. We'll go up to 99% for teachers, firefighters, police officers, nurses.
100%?
99% for those categories.
Hosting podcasts, does that get you up there?
No, I think you're probably gonna need to come up with 30% down, Rick.
30 to 40%.
You can tell Rick's a lawyer. 99%,
Yeah.
100%.
Yeah.
He's negotiating.
Yeah.
I didn't know you guys knew my credit score,
Yeah.
so now all of a sudden it's 50% down. I know.
Yeah.
So, all right. So let's recap. So,
Okay.
and I got to get you on again because we got a lot. I think this market's going to get crazy.
Yeah.
Rates are down.
Mhm.
Sellers are now selling. Buyers, you're right. We're very frustrated last year.
Yeah.
They're coming back around now. They just said, I can't take it anymore. 30 to 40 offers on one house. I mean, it was like contests. You know what I
Right,
mean? They
right.
felt like,
Yeah.
they kept getting denied, and they felt, I don't know.
Because
So-
that first home is really an emotional purchase. You fall in love with a home and you want to get it.
right.
And to have
Right.
50 other people bidding on it and
Right.
losing that bid is really
Right,
frustrating
right,
for a lot
right.
of first-time home buyers. And then they just said, I'm going to rent again. So
Right, exactly.
Yeah.
So some of them are back around again.
Yeah.
So we think that instead of saving that money for another 12 years to get that 20% down, it might make sense to get a little
I think it's definitely
private
worth
mortgage insurance.
Right.
And
and start building equity in your home now.
right.
Well,
And there is
and you don't know where interest rates are going to go. You
Exactly.
could save all those years
Right.
and have a higher payment
right,
by
exactly.
the time you buy.
Exactly.
Right. And you know, as we talked about, private mortgage insurance can be canceled for a number of reasons. You can talk to your loan officer about that when you're applying for the loan, so you have a good understanding of that.
So they don't have to refinance to get rid of it.
No, if you go to the Arch website and go to the section under MI cancellation, there's a great Q&A for
Oh,
consumers
it's pretty good.
on information about canceling MI. So there's a lot of information out there, and that's the other great thing about today's market is, you know, we have the
Is
internet.
the
and
studio
people-
audience starting to bother you? I know they're up here taking
people-
pictures of us now.
and people
Really,
can-
please.
People can learn a lot of different things,
You
which
guys
is
are
great.
you guys are famous.
Yeah.
Look at the
All right.
mob. They're
I
just
know.
taking pictures, and
Yeah.
they'll probably want to ask you information
Yeah.
and a lot afterwards there.
Yeah, and I'll hang around and answer questions.
All right,
afterwards,
all
of course. And I'm happy to come back anytime.
Give your website, because that is good. So you
yeah.
do a little
so
Q&A
the Arch
on the website?
is
Yeah.
www.archmi.com. So archmortgageinsurance.com.
All right.
Yeah.
Lou Chinnapi, thank God you showed up.
Yeah.
Ed Sullivan, thank God
Ed,
you showed up.
Yeah.
We didn't know this was going to be a
Yeah.
beach and golf day for all the other co-hosts. Thanks again. I
Yeah.
appreciate it. Thanks for joining us in the Real Estate House Party. We'll see you next week. We'll see who shows up.
All right.
Bye-bye.
Thank you.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.